All right, let's jump into things. Where we at? 15th of May. So halfway through the month. Jesus, the month is absolutely so ticking around. And where we at? 7 past 10. So look, I'll have a quick look at the news, and it's pretty flat overnight. Wasn't really anything too much of note. So no sort of massive drivers. Had a little bit of Aussie data yesterday, the wage price and that, which so had obviously sort of ticked up a little bit higher. So it's a bit of a query for me on this one here because honestly, wage price index, obviously labor costs going into things. If that's going up, I would have assumed probably more leaning in the camp of cutting. But the way they've marked this is obviously sort of said that it's bit of a positive for the currency, for the Aussie. But yesterday, woof, what an absolute shocker, shamble of a day. Like, I was sort of on the road for most of it, jetting around, but of course, you're always sort of watching these things. Did absolutely nothing, particularly in Asia. I think it was Aussie was in like a 10-point range. So yeah, that was an absolute sort of shocker. And then obviously sort of through Euro and then into US, and now we actually got the movement happening, which was good. It was short Aussie, short gold. But I'll get to those in the charts in a moment. Look, in terms of data, we had the sort of leading index. I don't even follow this at all. So, it came out, I guess, revised down and then dropped a little bit lower down there. Main ones we're looking at this morning. We've got inflation expectations, 4.2%. They don't give a sort of prediction. What's that looked at recently? It's moving in a sort of, more um, sort of moving up a little bit there. So inflation expectations obviously seeming to sort of creep back into the market there a little bit. But the bigger one is the employment change, and this one's almost sort of like a bit of a sort of ongoing running joke with with these guys because they spam 20K pretty much most of the time. The only times they haven't, you can see last month they actually, the last 2 months have sort of stepped outside their comfort zone and said, "Hey, look, you know what? We're gonna add a heap of jobs." They've missed both times of that. They got no, actually not too bad. They got a little bit closer that time there, but March definitely on the wrong side of things. I mean, they've gone from what 44K, slow down to 30 because obviously that's revised back to 30.5, and then it came in negative 52. So I'm not quite sure what the driver was for that. There must have been something to give this massive outlier there, but yeah, they pretty much spammed the sort of mid 20s each time, and so expectation here is obviously, a drop down from 32 down to 20, which is not particularly great for the currency, well, for the economy kind of thing, obviously showing that it's sort of slowing a little bit. Though unemployment rate is still staying the same at 4.1. It's been around 4.1 for a while now, as you can see. 4%, expect up to 4.2, came in 4.1, 4.1 flat, 4.1, 4. So, this is still pretty sort of flat with it all. So what you're kind of looking for with these ones at least is sort of, I mean, depending what way you're looking, I'm still looking to try and get this Aussie trade down, but that's based mainly off, USD strength. So we'll see how this one plays out. But if this number comes in weaker, well, firstly, if we do one by one, if it comes in weaker there, well, it's obviously showing the economy sort of struggling a little bit more. You're not adding jobs. Say this all the time. Why you're not adding jobs? You're adding jobs because you're not so confident with sort of moving forward. Maybe sort of production slowing down a little bit. So that's not the time. It's like let's work with what we got, and then we can look to add jobs on top of that once things are a little bit rosier. So if the things aren't great, well, that's the government or the RBA will see that more as like, okay, potentially a tick in the camp of it. We might need to do something to help. Yeah, and what can they do to help? They can lower rates, make it a bit easier for the companies to borrow, to then expand, to then manufacture more, and then thus hire more. So that's how that would sort of play out. Unemployment rates and that, if this starts to creep up towards mid fours, I would say, so mid four, like say 4.4, 4.5, these kind of things, that's when the economy's in trouble. So, because it's been hanging around 4% for unemployment for a while, it's not actually that bad. And that's actually, if this stays lower, is more in the camp of, well, they don't need to do so much. So you get a little bit of sort of conflicting numbers with the expectations here. But keep in mind, this 20,000 is generally wrong. Like, these guys have got an absolute horrible track record of actually sort of predicting the number. So there's a good chance we come out with 40,000. That's not my sort of prediction, sort of saying that, but I'm just saying, given how they sort of like their track record with having some sort of forecasts to what it actually comes out to be, the actual number, they're generally off. So I wouldn't be surprised if this comes out 40,000. So if this comes out 40,000, that's obviously, well, hold on, things aren't as bad as we thought. If unemployment stays low, that's a tick and a tick in strength for Aussie. Should those others come out there. So if this number creeps up, weak for Aussie. If this number creeps down, weak for Aussie, vice versa. Through the rest of Asia, it's not a great deal to do, not a great deal of data coming out. We've got GDP coming out of UK. That's seeming to sort of slow down there a bit. Look, I don't follow GBP, I don't trade GBP, but obviously it's good to sort of just keep on top of sort of what these other sort of larger, G10 economies are kind of doing as well, to sort of see that sort of overall trend of things. And that's looking like a little bit of a slowdown. So that could affect the GB pairs, but as I said, that doesn't generally reverberate across the rest of the market. Through Euro session, a couple of bits and pieces coming out with data, but nothing sort of super of note. We've got quarter on quarter Euro GDP here. But then sort of moving on into the US session, these are kind of the things that might sort of be moving the market a little bit more. We sort of look, sort of retail sales obviously sort of ticking down, not a big one there, and PPI. So PPI obviously being upstream basically of your CPI being the consumer, the end, the end consumer, end of the road, but producer price index, that is also looking to tick up here a little bit as well. Excuse me. So we've got retail sales looking to slow. We've got PPI looking to tick up slightly month on month. So PPI obviously producer price index. So if they're paying more for stuff, if the inflation sort of hitting the producers a little bit more, they're paying more for the materials and the inputs, then you can expect that could have a flow-on effect downstream to coming to the end consumer. So an early indicator of a sort of CPI. Okay. Moving on, we've got unemployment claims. Very flat, been flat for a while, not really a big one of note. I think I covered it the other week, but when this gets to around 400, that's when you start to take a bit more note of it. Empire Manufacturing, Philly Manufacturing. Okay, so Empire Manufacturing, both still negative, so it's not anything sort of spectacular with it all, but Empire State looks to be coming in flat, and Philly Manufacturing Index looking to come in obviously still negative, but not as negative as it was. So a positive through a negative number. Look, it's a bit hard to call these sort of things. I mean, obviously, any sort of positive movement is good, but it's not like, oh my God, wow, things are really they're not sort of putting out positive numbers. So it's kind of not bad, but not super bad, but not good. So it's somewhere in the middle there. Obviously, still some negative in that, but the closer these get to sort of turning positive, the more strength you will see in the US dollar. And I really think at the moment it's just the US dollar is just the main driver of everything. We've got Powell talking 11:40, so I think there's a big sort of thing going on with it has been going on for a while with sort of Powell and Trump and that. So Powell's sort of staying very strong with the fact that he's actually the one calling the shots there. He seems to be not overly sort of pressured because I know sort of obviously Trump wants weaker US dollar. Weaker US dollar obviously better for their exports and that, but he seems to be holding quite strong for the moment, and even his comments from the FOMC were sort of like they're in no rush to doing things, which I think market took as a bit of a positive for US dollar there as well. Through the rest of US, not really a great deal on that. So, main sort of thing, obviously, unemployment rate and the employment numbers coming out of Aussie in just over an hour. and then sort of, rest of the session's pretty quiet and that through till we get through to the US sessions overnight. So have a look at the charts. We've got Aussie absolutely flying around. So look, it's in a very sort of this has been an absolute nightmare to trade, to be honest. In that, like I'm a big in and out trader, but I've been looking to get this break down the bottom here. We've had these two zones that have reacted quite strong both times. Should we get a third push down here, well, then we've got this third level to sort of deal with. But as I've said, I think this is where your stops are sitting. I think sort of if you get down underneath here, then this is it. It's the top, and we look for the deeper pullbacks. We'll pull up the fibs, maybe to the 61. Maybe we go even deeper. Who knows? Again, I think it's really on a US dollar story. Where we are at the moment, if we just clean it up a little bit, have a better idea of this, because this is the big recovery move, the fib that we've got here with the green. So, it's only really come down to the 23% of this bounce recovery move. So the bounce has been just incredible. But this move up the top here has just been range bound, choppy, tries to break out, three drive, fakes down, all this kind of stuff. And it's just been an absolute nightmare to trade. Where we're kind of at the moment, this is a little bit of a sort of channel. I'm not a big fan of it, particularly the top side, because we've really only got the two touches through there. But if this were to be, it would be a bit of a back test stage here. So should we sort of get a bit of a run up higher, this out of the way, this would be probably about the time you'd say, okay, look, broken out, back test, moving up kind of thing. I'm reluctant on it. As I said, I still think the US dollar's got sort of more to go, and I think that's going to be putting pressure on Aussie. I think Aussie's held up pretty well, all things sort of considered. Because obviously, US dollar's sort of been sort of bought up quite aggressively, sold off quite aggressively, but it's kind of pretty immune to it all. And for the most part, as you can see, through this whole sort of attempt to move up with US dollar, it still hasn't been able to get underneath the 23%. So, the buyers are still crazy around here. I mean, look, this bounce here, we were coming down quite strong into yesterday's open. But, off there, we saw a bounce of over 2%, which is quite strong for Aussie. Well, it's quite strong. 2% is quite strong for any currency in that. But as you can see, it really just churned through here. It did sort of think about it the other night when we had CPI. It didn't fly off straight away, but once they started to really hammer into the US dollar, we saw it obviously take off. One thing I've noticed, and I actually traded the short side of this with this three drive yesterday, was that this seems to be a bit of a reoccurring theme you see with Aussie. So I'll have it on the other chart as well, Aussie chart. And I mean, look, it's all the same. Let's just go back to this other one. So this was the three drive we had through this big range. We had for what, better part of a month or so. Tried to come out here. Nice little baseline. One attempt, two attempts, three attempts. Getting higher each time. Coming back to that solid horizontal. Broke under. Retest. Quite a deep sort of retest in the scheme of things, because as you can see, this is your support through here. Came up to this, second level of retest, and then bang, sold down. So we saw this obviously on a smaller scale, but the same sort of setup here yesterday as well. And this one, I traded Aussie short on this one. Whereas you've got one drive, two drive, three drives, and then this little period here, you can't see it on this, but on a lower time frame, we can see this little period here, and I actually sent a screenshot to a mate and said, look, given that other chart that we were looking at, I said, this is where we are here. Yeah, just let's see if I can sort of find it. So this is the chart. Whoops, this is the one I wanted here. So look, the same as the high time frame. If this plays out, this is where we are right now. Just this little one drive, two drive, three drive. This little break, retest, and then move down there. So you got to play these things for the size. That was obviously the original one was on a high time frame. Aussie here, band 2, 3, and this is where we were just here. This little breakdown, pull back up, and then gave up quite well yesterday. So yeah, look, the short side of Aussie played quite well. We're seeing a little bit of a buy up now. Let's get on to a better time frame. We can see it obviously sort of trying to find sort of support around this zone here. This sort of 64.20s, where we get down to 64.18. So a little bit of a push up now. We'll see what happens when these numbers come out. But as I said, as I always kind of say, I think Aussie is really at the mercy of what they want to do with US dollar. I think if they decide to sort of push US dollar a little bit higher, that's going to be the biggest driver on Aussie. China has, for the time being, stopped moving down. So as it was moving down, that was obviously sort of giving a bit of a sort of strength to Aussie. I'm moving that more to a sort of bit of a sideways. It's not really doing much. It's just sort of, it's found a little range and it's just grinding along underneath the main supports. And RBA still, I'm reluctant to give them a tick and a green light for the Aussie because they're still saying, hey, look, we want to push up. I mean, we want to cut 4 or 5 times or something to the end of the year. So I'm watching DXY to sort of see what the market's doing with a broad sense with US dollar. And obviously keep an eye on these sort of figures that come out today. But I think sort of should we see a little bit of a push up higher on US dollar, I think Aussie's going to be at the mercy of that one there. And we could probably see a little bit more downside. So look, pretty much underneath the wick there, so underneath 18, we're probably going to see a bit of a push down. Buying back up, really, you'd want to see it back up above 46.65. This is an area that already had it marked out. You can see that it was a bit of a sort of resistance point, sort of going back on that sort of drive to sort of get the major breakouts. Came up just below that, sort of just below the 60 mark, with that wick to sell back down. So we know that this is an area which, if it's above it, it's attempting, but obviously sellers are pretty keen above this area. So you want to see sort of minimum kind of a close up at about 64.75s to show that, okay, this area has once again been recaptured and has like a bit of a push up here, that, and there. That's probably about the time that you feel a little bit more confident with the Aussie longs, I would say. RSI doesn't look like it's anything too crash shot. This is on the 4 hour. So yeah, I'd be hanging off on buys just for the time being. If you get back up above 64.70s, then it's not too bad. You've got a little bit of a area that obviously they're liking to sort of hold on to it. Sort of keep it sub sort of 65. I think we got pretty much right to the round number yesterday, and then the sellers came in, as you can see, a slightly engulfing 4 hour there, and then bang, drop down. So we'll see how we go. Gold's obviously sort of part factor with these things as well. That's hit major zones on a support. If that gets a bit of a buy up, that could obviously sort of push US dollar down. If US dollar's going down, well, you might see a little bit of a reprieve on Aussie there. But I think sort of the employment data is going to be the one that sort of drives us for the time being. I'm still looking for downside. Should you get back up around here, then I'll sort of reevaluate it. Speaking of gold, we smashed down into those targets. So that's a nice little short that we got sort of going through there yesterday. There's a meme sort of thing of, on the internet, whatever, it's on Twitter, it comes up every now and then. It's like, oh, here's my analysis, and it's just lines going everywhere. And mine starts to look a little bit like this, but I mean, that's the thing. The whole thing tells a story, and obviously there was a period where we were seeing what the sellers are doing here, what the buyers are doing here, so on and so on. If I put it actually onto a different chart, interesting sort of thing that I was calling out. So a couple of things here. One, we had this sort of rising support, which it was sort of obviously sort of came into, tested, broke through last week. Or was it Monday? Where were we at? Yeah, Saturday. So yeah, broke through. Is that Saturday? Saturday, Monday, whatever. Broke through there. So it's given up that. Hence this little arrow. We were thinking if we get down under here, we had the horizontal, we had this rising support, it gave it up after the break, and then boom, 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 and it's kind of moved down there since. A couple of little sort of takeaways with this. I was sort of thinking, note is like, obviously, I've been covering this every day, but you got this lower high that's setting up here, which we've called a couple of weeks ago. We sort of confirmed this one here. You can use this, and this is why sort of trading multiple time frames is always important. You can see the same play out here as well because you got the 3 legs, You're moving up, you find resistance, you move back, you find support, move up, you test to see. And this is the important leg that I always had to say, because this is the one that's going to give you double top, higher high, or lower high. In this case, we obviously got the lower high. That means that sellers have moved their acceptance down. They'll tell you they'll accept a little bit less for it, puts the pressure back down on the bottom side over here. But if you actually sort of get into this and look at this as the same sort of pattern, just on the lower sort of time frame, you've got your move up, finds resistance, move down, finds support, moves up. So this is the third leg in this little inside structure. And as you can see in this one, this is the leg that would have given us a double top, higher high, lower high. We had the lower high. So then the pressure, the emphasis comes back on the pullback. So this level here. So you can see the buyers stepped in at this zone just here. The emphasis now has shifted because you've failed to put in a double top. You've got a lower high. The lower high means now the emphasis is on this level, which it obviously broke through, retested, and then sold down. So, a lot of chop back and forth in that, but that's the general idea and the flow of it. So if you look at this on a larger, that little structure there, and we go back to the original structure here, we moved up, found resistance, back found support, up, found resistance, but this was at a lower high. So now the emphasis is back on this point here, and this point is the equivalent of this point just here. The pullback to where we found support to have that third run. 1, 2, 3. Same thing with this little section here. 1, 2, 3. It broke through that pullback area. This is the pullback area on the larger structure. They tried to hold it. Bang, they broke through it overnight. So the point that I'm getting to with this is that you can use this sort of smaller internal structure to see how did that price react afterwards. Well, obviously it pulled back quite significantly. So what could we expect then with this as well? Well, realistically, I could see this going sub 3,000. There's a couple of areas of support through this area. Obviously, this little resistance area here, but this was a fairly fast move down through here. I think there's a high likelihood we could see this move undone back down to sort of 3,000. If we get back onto the other chart, so we know that there's a lot of, apart from the fact we got scrappy little markings all over the place here. This is what I was saying the other day. I think it was on the weekend analysis. I said, look, we're going to come down to this zone, which we have now tapped into. Now, this is quite an important area because a couple of things. One, we've got this large move. Oh, where's it gone? From 2025. So this is January down here. This little dotted blue line, that's your fib from, start of January to now. Bang, we're back at the 38%. So this little 38% level here. We've also got previous highs from back in, was this just start of April, before we had the pullback, before the massive explosion. So, previous highs, that's also a second level. And also it is the 61% of that move as well. So if we take it from the April lows up to the highs, which are here, drag this across, this other one, you can see that this is also coming in at the 61%. So you've got three sections of the market that are looking at this going, yep, okay, that's a decent area. We've also got not as bigger sort of reliability with this, but should this is the lower highs that got connected. Now, if we drag this across, should this end up being a channel, well, you've got an idea that this is a little bit of support down here as well. This little bear flag kind of thing playing out, but I'm not a big fan of that. It did work well, but I'm not using that in this analysis. So anyway, point is you've got 38% of of 2025's move. You got 61% of April's move. You got previous highs. There's a lot of areas sort of saying that, hey, this is a very crucial level. And this is my point, that I think if we break down under this level, that's the move that I'm looking for. because this is a very quick, clean cut move, coming down and back up here. And generally, when things just glide through areas like this, you can almost expect them to do the same. Yeah, there's a little bit of chop around this area here, around sort of, 3,100. There's a little bit of a zone, a little bit of support that we had sort of through here. But underneath 3,100, this just moves clear straight up from, around 3,000. When it came down, it moved very quickly down, and when it moved up, it moved very quickly up. So, most likely you're going to see quite a quick move from these areas. Maybe it'll come from 3,100 down to 3,000, but I would say there's a good chance that we're sort of coming down around this sort of 3,000 area, should or when or should 3160 and this big support area break here. But what I'm kind of looking for as per the weekend analysis is this move here to sort of come down here. We expect market to react here, and for the most part, well, at least it's stalled, and they haven't really exploded up yet. We've got to see how this plays out. So what we're looking at now with this move is to sort of see how hungry are the sellers. If we say take the fib from the top there, we drag it down to the bottom here. This is what I was saying over the weekend with the analysis. Again, let's clear this up. If we see a rally attempt and it gets knocked down from 23%, if it moves up to this horizontal here, which was, the base going back, in that first pullback, was the explosion level for moving up. There's obviously a resistance here again. It's 38% of this move down here. So if we see gold get on to catch a bid, but if it rejects from this level over here, or rejects from even more so if it rejects even lower, so from like the 23%, and then comes back down to sort of tap this again, then you can see that the sellers, people are getting out, and they're getting out at a fast rate. So this is how we use the fib sort of mid-trend. You don't need to wait for the whole trend to sort of play out. You can look at it because at the moment we've got a little bit of a base. Should this thing just continue and break it early, well, that the sellers are just applying more and more pressure, and they're going to push it down even harder. But the point is, this is quite a high level area with confluence. There's a couple of people, different areas of the market that are all looking at this. So there's a good chance that we do see some sort of reaction here. As to how high, well, this could just come back up. We've got a little bit of a support area through here, up above, well, up into, say, 3,200. You got the round number, horizontal supports. This actually gave a 200 buck move, 230 buck move to the top side. I would be surprised if it really flies past here, but, you look at this thing, it's also just come down. What's that, 250 bucks or something. So a lot of people have sort of been shorting this thing and sort of, knock this down a little bit. So it's due for a bit of reprieve at some stage. So, I'm open to the idea that this thing could get a little bit of a rally up, but I think very much we're sort of heading down over here. And so I want to sort of see how strong the selling is as to how high this bounce comes before it comes back and tests this area again. If this thing comes up to 61%, then comes down to here, well, there's a bit of balance, and the deeper it comes back, the lower the likelihood of this breaking. If this only comes to 23 or 38%, then comes back, there's a higher chance of this thing breaking through. If it goes to 61%, well, there's definitely buyers that are pretty keen to take this up. Sellers aren't as strong because they've sort of allowed it to go back so deep. Well, the likelihood of it breaking on the next attempt is probably lower. So you use that as a target again, and then again, you look, where does the bounce come from there? So you want to see that the sellers are still applying pressure each time to sort of push that down under that level. All right, let's flip along. We've got silver. Silver's, I've said a few times, I'm just not really overly interested in this, and this is just complete chop at the moment. I mean, how big's the range? Even if you take these proper lows here, I mean, it's a 4% range. It's not too bad. It's definitely tradable. But to me, it's a bit in no man's land because, you got to identify what leg of the structure in. You're either in one of two. You're thinking, okay, here's the move down, here's the move up. You're in this third leg here. which at the moment is giving it a big higher high, which would lead to that, a big sort of push out to the top, not necessarily those levels, but the idea of the structure. So that's one sort of school of thought. Well, the other sort of being that, one second. Yeah, the other sort of being that sort of well, I guess actually it all kind of leads to that little structure, doesn't it? Sort of to see if it's coming up over here. But the other would be sort of obviously you're moving up, you're moving back, and this has tried to come up, yet it's found a lower high, like I said with gold. So the emphasis is on the base here to see if we pull back and come down over to these levels over here. To me, it's just scrappy though. You know what I mean? Maybe you've a couple of sort of short in out trades, but for me, I just want to see a break of this, and I'll drag this out here just to include this now because obviously the buyers have been jumping in at this 32 level or thereabouts. But I would say sort of pretty much a break of this zone is going to give you your angle. Drag this through here. We can see the sellers are really still trying to push it down, but I think by the time this gets to this end of this little triangle here, I think we should have decision, a bit more of an idea. But what I'd probably almost do is just do this or this till those happen. I'm not really too keen on trading this thing. I feel like it's sort of like one leg. This leg's going to come down here, and we got to sort of see what happens here, and then maybe push up here. I think this is just too high. I don't think this is a deep enough sort of pullback. If that's your one leg, I don't think that is a deep enough pullback. I think that is probably more likely. I'd be more comfortable buying it around sort of mid 30. All right, and move along. We've got copper. Copper, another one that's in a bit no man's land. So it's really just found itself a little range here. We got a high low of this sort of structure. We got internal little up down, sort of like it's like almost like a range inside a range. Um, I think sort of again, sort of US dollar is going to be the one that sort of tells us what's happening with these things. If we see a run up on US dollar, I think a lot of these things are going to suffer. Gold, as I said, I think will be a big sort of driver. Like copper's on the other end of the sort of metal sort of spectrum and that because it's more of a manufacturing metal. And things seem to be sort of, resolving themselves. There's little bits of war that are supposedly getting sort of quashed and all this kind of stuff. As I said, I just think the US dollar is going to be the driver, and that's what I'm a little bit reluctant to buy these things at this point. I do think we will see a little bit of a push. I'm trading the idea that we have a push higher on US dollar that will put pressure on a lot of these markets, and then I'll be looking to buy things a little bit lower. It could just grind up higher. I mean, we saw it with equities. Equities are still sort of pushing right up, but even those things I think are getting a little bit sort of toppy and running out of steam as well. So in terms of sort of copper and that, again, it's not super great fun analysis at the moment or plan wise, but that's the kind of look, that's the kind of thing I'm sort of looking for, a break of these major levels here. At the moment in here, it's just too scrappy. I mean, you could break these lows down here and then come down to the bottom. You've got a little internal structure here and get like a little bit of a trade-off down to the bottom over here, but it's not really anything too sort of spectacular at the moment. The massive moves are kind of done for the moment. And then finally, just with China. So we have sort of broken down, tried to recover, smacked down again. We've definitely found a little area where the buyers are keen to hold it above. So yeah, again, look, a move back down underneath 718. Look, 710 is probably your next realistic stop, albeit sort of at a slow grind rate that it typically does. But I still think the US dollar has a bit of buying in it, so I'm probably more open to the idea of this thing recovering back up to this 728 area. I think the time of it sort of like coming back out the top over here is done. In terms of their China and the US trying to sort of they're reducing the tariffs on each other and doing all this kind of stuff. I think if China sort of devalued their currency too much or allowed it to get back up to these areas, I think that'd be foreseen as a little bit of a angering thing to the US. And so I don't think you're going to see 736 or 740. But what I do think you might be able to sort of see is a little bit of recovery and balance back up into the middle of this range that it's been in for the last couple of months. Have a little bit of a, I mean, this is 1, 2, 3 attempts to break it lower. At this point, it's still underneath the supports, but should it come back up above here, I think we could see it move back up to 728. All right, that's it from me. All right, and yeah, of course, I forgot to all important DXY US dollar. So look, we had this sort of move up into this resistance area, and I was thinking, oh look, we'll get a bit of a pullback here. It would kind of hold. This was coming into sort of CPI, and obviously CPI came down, and we saw it absolutely just drop through here and got hammered, hammered. There was something going on with sort of I think sort of Korea in that yesterday as well, which at the start of Europe session just really saw it go bang, smack back down. So structurally, we're seeing it really come back and retest this important area. And this is what I've been saying, like, you've got your internal structures that are sort of moving up and down through here, but you've got the buyers moving up, still holding each line here, and albeit a little bit of a scratch up from here, pretty much this is the zone that you're looking for the buyers to hold for this move to sort of stay in effect. It does look like it wants to sort of push back up a little bit. It had this little pullback channel that was sort of respecting till it sort of, almost sort of capitulated down under here. But obviously, as soon as it came into this zone, buyers stepped straight back in. A little bit of a pullback. We got to sort of see, is this it? Is this like, the bigger structure, pullback to support, and this is going to give us our lower high, which in case we sort of roll down, then this is pretty much where this trigger level is. Underneath 100, I would say you're probably looking lower. But should this thing pop up to the top side, as I said, we've got PPI and retail figures tonight. A bit of a mixed bag of what's expected there, but I think that could obviously sort of be the sort of mover. But they're the kind of two levels, above 102, below 100, and it's a fairly big range, 200 points. But I think that's really what's going to give us our direction moving forward.